welcome to the Jornaya Talks Mortgage Podcast. I'm your host, Mike Eshelman, the resident mortgage geek, head of consumer finance at Jornaya, former marketer at a consumer direct lender, and excited to have today's guest, Grant Moon, on, who I've known for a little while now, but gosh, I mean, we've been on, I don't know how many panels together and have spoken at the same conferences and everything. So super excited to have you on. How are you doing today?
Good. Thanks for having me, Mike. Yeah, and so Mike, just to give everyone a little background too, I thought we were doing a call today to organize a future podcast, and Mike says, well, it's always best if it's organic, and I'm like, well, I would have worn a different shirt and maybe not a hat either. He's like, no, it's always the best when we do it that way. So I was like, okay, we might as well do it this way then.
Yeah, well, I mean, we were just catching up, and you were talking about so much that you've been doing in the last few months, because it's been a few months since we really caught up. I mean, shoot, it might have been since October of last year that we really caught up, and just
feels like 10 years ago, right?
Eating at a restaurant feels like 10 years ago.
Yeah,
this is pretty wild. So as we were catching up, you were telling me about some cool stuff you guys have been doing. So Grant's the CEO of HomeCaptain, but so much more now. So, you know what, how about you give a quick introduction, who you are, what you've been doing with HomeCaptain, and then get into some of the cool stuff you have just been doing over the last couple of months.
Yeah, sounds good. So I actually, I fell into the mortgage business just through happenstance. I had a company before HomeCaptain that did pricing tables specifically around veterans so that veterans can compare rates and fees and select the lender. And then we did education around that too. And we ended up selling that company. But that's how I really got into mortgage. It started as a school project in grad school, somewhere around eight years ago. And then, you know, it gave me a great understanding and appreciation of the mortgage market, and also the connectivity needed between real estate and mortgage financing, which most people use financing in order to buy a home. And so found that a little bit of a disjointed process, did some test pilots with some lenders that we knew circa 5 years ago. And, you know, that brought us to where we are today, which is, which is really a conversion incubation. Also, we have discounted listing service based off our new acquisition. And, you know, so it's been an interesting time, especially over the past 3 months. Yeah.
So my career has been the mortgage industry. My start in the mortgage industry was a loan officer at a consumer direct lender, a couple thousand employees, call center setup. And this, you know, back in, like 2004 or something like that. Literally, I was in training in the morning, signing my paperwork, met the CEO, and then in the afternoon, I was on the phones taking applications. Back when you didn't need a license, right? It was just the company that needed to be licensed. Refinances were always fairly easy in the consumer direct model. Here's a quote. Are you ready? Let's go. When it comes to the purchase side of the business, though, conversions were always a big struggle. The market tended to be dominated by realtors who would make the introduction to the finance side of the business, right? To local brokers or retail officers. So you've been helping lenders kind of take it the other way so that they're referring their consumers over to the realtors, right?
Yeah. So, I mean, a lot of that, again, stemmed from, you know, my early education from my past company is, you know, we had lenders that sat on our platform, would give their pricing, and we had menu pricing like many lead providers do for purchase versus refinance. And I found that no one ever wanted to buy purchase leads from us on that platform. And I was like, why? And I didn't have like the knowledge that you did or anything. I was more a technologist, and I didn't know the intricacies and intimacy around refinance versus purchase. And when I did a deep dive in understanding and talking to some of the great mortgage professionals like yourself, I found out that that was a phenomenon that happened, is that, they didn't want purchase because, a number of things. People could fall out of the pipeline, they ghost, they do whatever. And then, but mainly because, the agent was so influential that they would, bring it to their local guy. And in studying just the macro trends of, customers now seeking the lending solution first, before they actually go to an agent, was even a phenomenon that was created from the last downturn back in 2008, where customers became educated on needing to understand first if they even qualified for a mortgage, because circa 2008 and beforehand, everyone really qualified for a mortgage. Didn't matter.
If you have a pulse,
Exactly.
you qualify.
Exactly. You qualify. Oh, okay. But
Yeah.
then the consumer got a lot more educated in knowing that credit tightened overlays were a lot more of something that needed to be worked through with a mortgage professional. And so they knew, just based on those behavioral changes, that they had to go to a mortgage company first. And there was an interesting phenomenon during that time as well, is that you had a lot more growth in a style of lending, which you and I know as consumer direct, right? And so in that consumer direct, growth from the popularity of that model, along with consumers' preferences or understanding changing, those two things intersected. And we knew that purchase tied with lending would be incredibly important, and to solve for the long tail incubation associated with purchase, and not having that relationship be so transactional, which is a little bit more prevalent within the refi world.
Mm-hmm. Yeah. So I want to say last year, probably mid-year or so, I started hearing you talk about AI, right? Artificial intelligence. You guys have been doing some work there. Can you talk a little bit more about what you've been doing in that space?
Yeah. So really, it's a lot of it's designed around top of funnel. So core. Well, like any business, right? You have to be very knowledgeable in terms of the funnel process, and so one of the big things that we've always seen is that there is a lot of leads and data out there that lenders have to sift through in order to mine for those customers that can go further down the funnel from a lending transaction perspective. And so earlier in 2018, we signed a deal with a pretty large lead aggregator that put a lot of, let's call it, you had to use either humans or technology or a combination of both. And so that kicked into motion a lot of R&D development at the time, and us doing a venture capital round for us to finance additional R&D around AI, and using some of the other things out there. Like, for instance, we have IBM Watson attached to our AI as well, that allows for it to learn and faster and record it. And so, what we wanted to do in our thesis was that, there's a substantial amount of leads that don't ever even get contacted. It's a contact rate game, right? And contact rates for leads are roughly 50% if I were to ask any one of the, even our mortgage customers. So they're about 50%. So that leaves 50% of the entire universe, 50% of everyone's capacity on the front end, from calling to dialing to personnel, that are relatively wasteful, but are required in order to mine through all of those contact rates to then get the contact app, get the app to pre-qual or, refinance or lock or whatever, and then bring it to an overall monetization event. Mm-hmm. And so, our thesis is that, well, this could likely be done via an automated fashion with a humanized persona within an AI bot that allowed for us to have those conversations, but not in a telephonic way, because although we've experimented with the telephonic way, you can't not have the thing sound like Max Headroom right now. I'm kidding myself. I'm 40, but like Max.
I was going to say, I wonder how many people are actually going to get that one.
Yeah,
because I'm with you. I'm with you.
Or Stephen Hawking's voice recorder. Like we could use a different. But more so that text message was a lot more of a movement from a consumer preference perspective, which makes a lot of sense. And so we designed our bot, which is a chat bot, which we now have a persona. It's called Jordan. We have a few different personas that can go back and forth with customers related to, simple questions that consume a lot of people's time in answering. And probably the consumer direct world could give like 40 different examples of how much, customers they talk to that, they probably shouldn't have ever even called, and you're seeing this even more now, of course, right? You see that the Fed put the interest rate to 0. Customers think that the 0% interest rate is actually the mortgage interest rate. You see the same thing with questions around forbearance versus refinance. You see all of those various different things that are consuming the mortgage universe that really don't necessarily entirely have to be handled through human interaction. What we like to consider is that there's a unique intersect between technology and the human element that allows for a good consumer experience. It's not one or the other. It's normally an equilibrium point between the two.
Yeah, I mean, you bring up a good point in terms of, well, what I was hearing with that is we work with a couple of banks that were initially, kind of mid-March range, starting to complain about the number of phone calls, the number of inbound calls they had. Number one, they were doing a ton of business because refinance rates gotten so low. They're at capacity, and they weren't spending much money on marketing because every dollar that they were spending on marketing is a dollar wasted because they couldn't handle another deal. On top of that, they had so many phone calls asking, for the 0% mortgage or, whatever, forbearance. They just had so many phone calls coming in. I want to say it might've been 3 or 4 times the capacity that they could handle. And that's capacity at what they can handle times 3 or 4.
Sure. Yeah.
Capacity is a busy time.
Capacity is a real thing for sure. Yeah. And being able to discern between the two.
Absolutely. And that's, just being able to upfront understand, who's asking about this, go there, who's asking about that, go there, and handle that in more automated fashion. Because now you start talking about how many agents are available to handle that, who they should be spending time with, et cetera, et cetera. Now throw into the mix work from home, coronavirus, enforcing a whole new process.
Right.
I mean, heads are spinning in mortgage through all that. So
not even factor in like the whole, things that the mortgage companies have to deal with the margin calls and everything else too. It's like, and like the hedging, like everything, took a little bit of a strange little perfect storm. Yeah.
Yeah. I would say everything what I knew after a decade of being in mortgage, anyone who's been in the business for a year that was paying attention to what was going on over the last couple of months has a decade of experience now. Cause I mean, everything was being thrown at the mortgage industry with all of that, which does make it interesting. And I don't know if you've really heard any stories from, the realtors or anything like that of what's going on. But I was speaking with a loan officer yesterday based in Texas who went to drop off some flyers in an open house. People are attending the open house, no masks being worn. Now I'm in Los Angeles and it's a different world here. There's a form you have to sign if you're going to go view a house that says you're going to wear a mask, gloves, booties, and that you haven't had any symptoms, no cough, no fever, et cetera, et cetera. It also says that the person selling the house has wiped everything down to the best of their ability. But basically, both parties are taking a risk walking into a house. It's pretty stringent right now, but I mean, what are you hearing out there? What are you seeing? Or how are realtors doing?
So there's some states that we have agents in that they considered real estate to be an essential service. There's some that did not, like California, right? I think what's interesting and kind of what's happened over with HomeCaptain actually on February 26th, it finalized and registered that we acquired a real estate technology company called Redefy. So on top of all this stuff going on, we acquired a company, took them from private to public with our partners, and that product or division that we call it now within HomeCaptain only ever did listings, very similar to like a Redfin, so discounted listings. But one of their products, or one of our products, is digital full service that they've had forever. And what was really interesting, because you can only like connect a lot of these dots looking backwards, is that we're seeing in the month of March our sales increase for that product. We saw 224% increase in our digital full service sales, where you don't ever even meet a broker to sell your home. And I was like, ooh, hero, like
Grant's a genius.
I'm like, oh my God, like what happened? Is it just like, but coincidentally, it was the luck of the draw because of everything going on, and whether, and people's caution, and perhaps even, caution on top of intensity of caution, which didn't borderline hysteria, but, it was somewhere in between if you were to look on a continuum. So people were being overly cautious, and some, we're also then saying, I just don't even want to, deal with any people whatsoever, talk with them. And so we saw a lot of that, where we were able to sell people's homes without actually them even talking to anyone. We worked with buyers coming in as well that were essentially, they had to do, let's call it fully underwritten pre-approvals. And make the offer, and sometimes even before even being able to go inside the home and see. So it'd be contingency-based offers in terms of inspection and final viewing, and everything like that. So there's a lot of things that we see out there that were like that. And then in obviously some of the states that real estate was a non-essential service, you can't take a buyer out. And so there's pockets, and it's really interesting to look at how every state has handled things differently, because it really then made the real estate community do a number of different things differently. Like either, you're not going to do anything. We in fact hired for our call center recently some agents that actually were looking for full-time employment because their respective states, like a California, had them shut down in the LA area. I think it's like until mid-July, right?
I think right now we're pegging a 4th of July reopening.
Yeah. So, and then there's some states that, there's some states that opened up early, like a Georgia or a South Carolina, where I used to live up until about 6 weeks ago. Colorado opened like 3 weeks early. So all of those various different localized nuanced things is happening, which I would say has affected the real estate community pretty largely, more so than the lending community, because you don't need to do, for the most part, you don't need to meet somebody in person in order to do a loan, especially a refinance loan.
Yeah, it will be interesting out here in California. We've had, and understandably so, the supply has really dried up.
Yeah.
And demand has dried up too, but not as much. So it's really propping up home values right now.
Yeah.
I'm really curious to see, what happens as things start to open up. Are we going to have a flood of supply start to hit the market of everyone who had been planning on selling their home, and what that does? But, again, it's just like so many other things. It'll be interesting to see what happens as everyone starts opening back up.
Yeah, no, I mean, and you make a lot of sense. So like what we're seeing too is like, in some of the, let's call it some of the secondary markets, like Nashville, Tennessee, or anything like that, we are seeing growth in demand. And then some of the areas that growth in demand from buyers and also from sellers, where we're seeing declines in demand. And again, this is somewhat related to when people open up. Some of it might be pricing, some of it might be like fleeing from urban epicenters.
Hmm.
You see like the greater New York City type of area where prices are declining a bit. And maybe because everyone's getting ready to say, well, maybe it's time to move out to the burbs or something to that effect. And it's a lot of things that are only hunches that no one knows yet, but you do
Right.
start seeing like these pockets of data points that, to your point, like are pretty impactful, where we probably won't be able to know until we connect the dots backwards, but there's a lot of interesting phenomenon happening.
There's so at Jornaya we have our code across 35,000 plus comparison shopping sites, mortgage, insurance, real estate. I was looking at the insurance data nationwide, and since March, we've actually seen an uptick in shopping behavior,
Mhm.
uh, which, I wonder how much of that is attributed to the fact that so many people are working from home
Sure.
and can just look at home listings all day long and not have to worry about their boss walking by or anything. It's like, you're at
Yeah.
home, you could just check out houses all day long and have it up on your screen. But it's been a very noticeable uptick when it comes to that home shopping activity.
That's interesting because, I really hope that this, regardless of, you never would have hoped this scenario to happen. We are where we are and it is what
Yeah.
it is. But what I do hope for is that, and I hope I don't get my hand clapped in saying this though. I do hope that that does create a little bit more affordability for, the average American person, because there was points, especially up until the pandemic, that affordability was just becoming completely mismatched in terms of household income on an average basis across the country. So, ideally, there's a good much more pent up demand out there. Ideally, when they open things back up, I think I saw today there was an additional 2 or 3 million unemployment added to the overall figure. So it's pushing roughly 40 million unemployed right now, which is pretty sizable. So,
Mm-hmm.
ideally when, the country begins to open up, not on a nuanced state by state basis, but, on a national level, it creates, ideally some conditions for the everyday working American that can achieve the aspect of home ownership, that people get back to work, that people get employed again, and have the ability to have a clean balance sheet themselves so that they can buy homes, and hopefully it's a little bit more affordable. Yeah.
I I geek out on podcasts. I love listening to podcasts. My favorite podcast is Pivot,
Mm-hmm.
which is Kara Swisher and Scott Galloway. If you haven't listened to it before, you got to listen to it. Scott Galloway is a NYU Stern professor. He's a character. He keeps it super interesting, that's for sure. And he's filled with a ton of data. And so, they do listener mail, and I decided to submit my question, which it will be interesting to see, because if I'm allowed to make a prediction, this would be one of my big predictions that hopefully I can point back to this and say I was right, although I don't know if I want to be right. but um,
Yeah.
but I mean, listen, everyone's in this forced work from home experiment right now. So many companies, right? Everyone's working from home. What happens is if this ends up being wildly successful, we're already seeing, I think Facebook today announced they're projecting half of their workforce in the next 5 years to be working from home and hiring a lot more remote employees. Well, how valuable will office space be if so many more people are working remotely? You're going to have a lot more empty office buildings. Do those office buildings get turned into condos, apartments? Do you have a lot more commercial turned into residential, thereby creating a lot more homes for people to be living in, as opposed to, I mean, LA, New York, I mean, everything's so condensed, and home property values are just through the roof. So it'll be interesting to see if you start to see those conversions of office buildings turned into condos or something like that, just creating a massive, even a 20% movement of office to residential conversions, a huge movement.
It's true. So like we have capacity here in our office in Denver, probably for about 60 to 70 people. Right now, the entire company is working from home with a few exceptions, right? Like I'm in the office, Darla on our team, who's our assistant in the office, and then there's, one person here that we allowed for flexibility based on, them not having daycare and things like that, and they wanted to.
Mm-hmm.
But otherwise, everyone's working from home, and quite frankly, and I don't think my landlord will listen to this, but I mean, our lease is up in December, and I don't have any intention of renewing because, to your point, what will fundamentally change going forward is a lot more of like, you know what, maybe here's the recommended coming in and you need less office space, and maybe we stagger everyone to come in 2 days a week, and
right.
everyone, and even that is, let's call it like up to you too, but a recommended set of coming in might be 2 days a week. Well, if you're going to do that and you're going to save that much money on your rent, well, then what can you do to create additional engagement amongst your employees? Well, you could do like maybe a monthly like team building exercise. You could do a monthly outing, and that's the way that you create the camaraderie and the office atmosphere. And I'm just spitballing here, but to your point, you're absolutely right. Like,
at Jornaya, we've been wildly successful with this. We were kind of already set up for it because we have some, like myself, that I work remotely. I'm usually traveling, 30-40% of the time. But other than that, I'm working from home, and many others are as well. But now when you start, everyone else had to go remote, we have Slack, we have Zoom. We're used to the communicating with people out of the office to the point where we didn't really skip a beat. We've been doing really well, and we've implemented other things too that keep the employee engagement up. And so yeah, I mean, I think a lot of companies will find that it's quite successful, and have to make the business decision. Do you want to keep as much office space? I mean, don't get me wrong. I like socializing with my colleagues, and love going into the office, but you might not need as much office space.
Or you might not need as many either, right? Mm-hmm. Because like, even if like you're not a company that centralizes, that has like a huge office space or anything like that, and maybe you have 5 little offices, like we have an office in New York City, Charleston, Denver, Texas, Florida, and Tennessee. And you know what? Do you need all of it?
Right.
Probably not.
There's a lot. It'll be, we'll see what 2021 holds for us all once things open back up, and then everyone starts making some decisions. But look, I mean, we can go on and on. I'm telling you, this was great. I'm glad we chose just to hit the record button and see what happens. So yeah, I appreciate it. And hopefully it won't be too much longer before I see you out on the road at conferences and client meetings and stuff like that. Miss seeing your face.
Yeah, same here, man. Same here. And congrats on actually beating the COVID, and for you specifically going above and beyond with donations of plasma and your time and everything else. So that actually, when you told me that, even before we did the record button, I made a little note. I'm like, man, why is Mike doing so much for it and I haven't done anything? I better get out there and do the same. So, so kudos to you and for doing that, and your family for getting through getting sick, and then also doing your part for your community and donating as well. It goes, it's a big deal. So kudos to you. And I'll toot your own horn because I know you won't do it. So,
I appreciate it. Thank you.
yeah.
Yeah.
So,
Well, this was great. Grant, thank you very much for joining the Jornaya Talks Mortgage podcast. And until next time.
yeah. Thanks, Mike. Thanks, everyone.
All right.
Talk to you soon.
Take care.
Bye now.